Every year, trillions of dollars are zipping across the globe, literally shaping our economies and our future. But where is all that money actually going? Today, we're going to crack open the UN's 2025 World Investment Report to give you a clear look at the huge shifts happening in global finance right now. And well, the backdrop for all of this is, let's just say it's tense. As the UN Secretary General puts it, the world's becoming more fragmented, not less. Now, this isn't just some political statement. It has a massive, real-world impact on where companies and countries are willing to put their money. And here it is, the headline number. If you cut through some of the financial noise, real global foreign direct investment, we're talking about the long-term, cross-border money for things like factories and infrastructure, it actually fell by 11% last year. And get this, that's the second year in a row of a double-digit drop. So this brings up the huge question, the one we're really going to dig into today. In this fractured environment, with less money flowing overall, who are the winners and who are the losers? And let me tell you, the answer is way more surprising than you might think. Okay, so let's start with the big picture. The report's message is, frankly, pretty sobering. We are in a global investment slump, and it's not just in one or two places. It's broad and it's deep. And when you dig into the details, wow, it really tells a story. It's not just that overall FDI is down 11%. Look at international project finance. That's the cash for massive infrastructure projects. It's down a staggering 26%. What's even more concerning is that in developing economies, where it is needed the most, investment in renewable energy and clean water just fell off a cliff by about a third. These aren't just numbers on a page. They represent real delays in tackling our planet's biggest challenges. In fact, the situation is so serious, the report really doesn't pull any punches. It describes the funding gap for the UN's Sustainable Development Goals, things like ending poverty and fighting climate change, as a full-blown crisis. But here's where the story gets a lot more complicated. This slump isn't hitting everyone the same way. The global financial map is basically fracturing, creating these starkly different realities for different parts of the world. And this slide, man, it just lays that divide out perfectly. Investment into Europe, it plummeted by 58%. Meanwhile, it rose 23% in North America. And in Africa, it skyrocketed by 75%, though to be fair, that's largely thanks to one gigantic project in Egypt. But even without that, the continent still saw a respectable 12% increase. The point is this: money isn't just shrinking, it's being rerouted. So what's causing this great reshuffle? Well, the report points to three major forces. First, there's geopolitics, which is just making investors super cautious. Second, you have new industrial policies that are actively pulling money back home. Think of something like the CHIPS Act in the US. It's offering huge incentives for making semiconductors there, and that's a major reason for the investment boom in North America. And finally, companies are completely redesigning their supply chains to be more resilient, and that whole process is rerouting production and all the investment that comes with it. Okay, so amidst all this talk of slumps and fractures, there is one sector that is not just surviving, it is absolutely on fire. It's the one massive exception to this global slump. So with money flowing away from so many areas, where is this one bright spot? Oh yeah, we are talking about a huge amount of growth. Investment in digital economy projects, think data centers, digital platforms, you name it, more than doubled last year. A 107% increase in project value. It's not just growth, it's a tidal wave of capital. And we're not just talking about apps here. We're talking about the very foundations of our modern world. The AI revolution, cloud computing, advanced manufacturing, all of it is fueling this unprecedented investment rush into things like giant semiconductor plants and massive data centers. And believe me, these are not small-time projects. Just look at the scale of this stuff. Oracle is pouring over $6.5 billion into data centers in Malaysia. Microsoft is dropping $3 billion on cloud and AI infrastructure in India. And ByteDance, that's TikTok's parent company, has announced a nearly $9 billion plan for data centers in Thailand. This is where the world's money's going. Okay, so this digital gold rush sounds amazing, right? But it brings us to a really crucial point, because this thing is a double-edged sword. It has the potential to create enormous wealth, sure, but also to leave a whole lot of people behind. And this quote from UNCTAD's Secretary General just nails the central tension here. Are we building a digital future for everyone, or are we building one just for a select few? This slide really lays out the paradox perfectly. On the one side, you have this incredible, explosive boom. But on the other, and this is the critical part, that investment is heavily concentrated. A handful of countries are getting the lion's share, while a lot of vulnerable economies are just being pushed to the margins, unable to compete because they lack the right infrastructure and skills. I mean, get this. Over the last 5 years, more than $500 billion of this kind of digital investment has gone into developing countries. But again, the report really stresses that this number hides a deep inequality. Most of that cash is flowing to just a small group of emerging markets, creating a really dangerous digital divide. So, this all brings us to the final and maybe the most important takeaway. These patterns of global investment, they aren't just numbers on a page. They really are a reflection of the choices we are making as a global community. The report uses this really powerful metaphor. Investment is a mirror. What we fund is what we value. And right now, that mirror is showing us a world that values digital innovation above almost everything else, but is kind of failing to invest in the basic, sustainable development that would benefit everybody. So, we're living through this strange paradox. A widespread investment drought in all these traditional and sustainable sectors, happening at the exact same time as a historic gold rush into the digital economy. And that leaves us with the ultimate question, doesn't it? The flow of money shows us our priorities. So as we build this new digital world, are we basically programming inequality right into its code? Or can we steer this massive wave of capital to create a future that's not only more connected, but also more fair? The choice, as a report makes crystal clear, is ours.